Hey guys, so welcome again to another VenturePOP workshop in our workshop series. As most of you know, VenturePOP is not only an annual event that's taking place this fall in September, the last day of September, first day of October this year, but we also support creatives throughout the year. We host these workshops and fun little events between now and then to keep everybody together. And we have a private Facebook community for everyone to join to kind of like chat about things in between the conference and gear up and all that good stuff. So today we're super excited to bring to you one of our VenturePOP speakers from 2016, last year. She presented on stage and everyone was super intrigued by the information that she had. And I feel like the presentation and questions and panel could have gone on for another hour. So we thought it would be perfect to bring her back here and not only let other people that were people that weren't able to join us live in person last year, but also to kind of continue that conversation from the stage. So I would love to welcome, first of all, I'm Christy Astolet and this is Sierra Hosenthal, and we host VenturePOP every year. And we are super excited to announce Amanda Aguillard, who is the Principal Accounting at Aguillard Accounting and also the co-founder of Elephant Training, which is training workshops for Xero, which is Xero, which is a accounting software, and a ton of creatives use it so that they're able to like get all their accounting in order and kind of get back to work and do what they do best and have all of their business in order. I'm sure Amanda will talk about that a little bit more in detail, but we just feel like a little portion of her regular trainings would be so perfect to bring on this workshop. So Amanda, welcome to the workshop series.
Thanks, girls. It's nice to be here. I've never had such an enthusiastic welcome and introduction for accounting and tax, which is kind of a normally sort of a boring topic. Hopefully I can give you guys some good tips and tricks to help them get through running their getting their financial straight for their businesses. Can everybody see the screenshot of my slides? It looks like it can from this end. So if it's not working, let me know. Otherwise, I'll just presume that it is working fine. So as Christy said, I'm Amanda Aguillard. I'm a CPA based in New Orleans, but we have clients all over the country. That's the good thing about being in the accounting space in 2017. We can have clients all over the country. So I've been a CPA for a long time, and I came from a background of big accounting firms and companies, but what I really, really love, and I think Christy knows this, what I really love are small businesses and particularly creatives. I love the idea that in this day and age, we can each find whatever it is we're passionate about and figure out a way to make a living off of it. So I love supporting creatives in that respect. As she mentioned also, I am a Xero partner. So Xero is an online small business accounting package. I happen to like it better than anything else because I think it's intuitive and clean, and creatives love it because it's a lot prettier than other packages out there. But we also do work with other add-ons. So here are just a couple of those that we use to integrate with Xero. Anyway. Okay, so let's talk about why does accounting matter? You certainly weren't born thinking that you were going to end up having to do accounting, but by nature of you being here, it's obviously something you've got to give some thought to. So why does accounting matter? Like, you guys are bloggers or artists or create other creatives. That's what you really want to do, but why do you have to do accounting? Well, one thing is measuring performance of your business. So it's a way to quantify the performance and the success of your business. So it's awesome to think that we could sit in a studio and create things and that will give us fulfillment. But the reality is that there are bills to pay, there are things to be taken care of. So how do we look at the way the numbers are and are going and decide, is it good or is it bad, or do we need to make changes? So accounting helps you to measure that performance. It also helps to guide strategy. So because we get some quantifiable information out of the accounting world, we can say, what does success look like for us? Is it that I end up the year with a certain dollar amount of profit? Is it that I add a certain number of new customers? Is it that I create a certain number of pieces? Those are all things that we can measure within our accounting package and guide our strategy. So it forces us to think about what success looks like and gives us some data for that. And then lastly, the reality is that the government's going to make you do it. You've got to do a tax return every year. So there's got to be some sort of way to wrap up in a bow what you owe the government, and that comes out of an accounting package. Although I do want to say that I put that third on the list. I want you guys to really think that if I keep up with my accounting during the year, I'm going to get numbers 1 and 2 out of it, and that's more important. Then number 3 becomes irrelevant, right? Because if we're keeping up with the accounting, we're keeping up with the bookkeeping every month, in order to make these good business decisions for ourselves, the preparation of a tax return is easy. It's only overwhelming when you wait till the end of the year. Okay, so at what point in a business do you need an accounting system? Well, when you've made $1 from doing whatever it is that you love, you are now a business. So whether it's the, you sell a piece of jewelry or sell a piece of art or sell some of your time as a writer, blogger, creative, when you start to get money in, you're a business. And that's a little bit scary. The IRS is going to want a piece of that, but that's okay, because once we've unlocked the idea that it's no longer a hobby and it's a true business, with a profit-seeking motive, I'm using my air quotes even though you can't see me, a profit-seeking motive, that unlocks some deductions for us. So it's not unrealistic to think, at least in the first year or two, these businesses lose money, and that's okay, because that will offset the other income you might have. So what are the bare necessities for running your passion as a business? And this is, if you learn nothing but this from this webinar, these are the 3 things you've got to have to really run yourself as a business and set yourself up for success as a profit-seeking business. The first is a separate checking account. Christy knows me, and some of you guys out there may have had discussions with me before. I'm pretty easygoing, especially as far as accountants go. I'm pretty laid back, but this is non-negotiable. This is one thing I insist on. You have got to have a separate checking account for all of your business income to come in and all of your expenses to go out of. And the reason for that is that at the end of the year, or at the end of each month, hopefully, you're looking at what income came in and what expenses came out. If we put everything through one bank account, it is really easy to wrap our arms around the entirety of it. If instead we are using a personal checking account, personal credit cards, cash from our, from the ATM, it's nearly impossible to ensure that you're going to be able to gather accurately every single dollar of income and every single dollar of expense. So if we force ourselves to use one separate checking account, that will funnel everything through one space. Then if you, for whatever reason, have to ignore the analysis of that throughout the year, it's okay, because we just know, okay, from January 1 to December 31st, every possible transaction related to my business is going through this checking account. The second one is an LLC. That's what we use in Louisiana. It's a separate entity, a legal entity that separates the business from you personally. It gives you a little bit of legal protection from liability. It doesn't cost very much money to set up. In Louisiana, it's, I think, $75. Most states have this, but it is based on your state. So because I know that we may have people from all over the country, I can't say with 100% certainty that every state has an LLC as an entity choice, but I'm pretty sure that most do. Again, it's just a matter of filing a form. You can do it in Louisiana. You can do it very easily online through the Secretary of State website. And then the third thing would be an EIN. That's an employer identification number. That's easily gotten online for free. So if you go to the IRS website, irs.gov, and do a search for get an employer identification number, it should take you to the IRS site. There are other sites out there that will charge you for this. You don't need to pay for it. It is free from the IRS, but you get an EIN so that you can use that instead of your social security number on any documents you've got to file with the government or with people that hire you. You guys probably have been in a situation where somebody that's paying you is asking you for a W-9. That is the form that tells the payee how to report your income. If you don't have an EIN, like I suggest here, you're going to have to give them their social security number, and you just don't want your social security number out there needlessly. So get a free EIN. It's pretty easy. Okay, so our firm philosophy on taxes, as I mentioned, I've been a CPA for a long time, and I actually have a master's degree in taxation, which means I spend a lot of time learning really creative, high-end tax strategy. But a lot of those things just don't apply to most of the people in the real world. So, so I often get, questioned, well, how do I avoid paying taxes? You're not going to avoid paying taxes. You can't avoid paying taxes. You're going to owe, if you make money, you're going to owe taxes to the government. That's just the way it is. So taxes suck. We hate paying them, but it's just part of living in the United States. What we want to do is remember that our time is valuable. So I frame an organizational system for my clients where they're not spending hours and hours and hours and hours to save $10. That's not a good use of your time. What we do is make sure that we understand which expenses are deductible, and we automate the capturing of that. So going back to my point about the single business checking account, if we get the business checking account where every single one of our transactions is flowing through, if we get that linked up with something like Xero, Xero is going to pull those transactions down for us and help us to automate the coding or the classification of those, so it's really painless. So to me, that is a good use of time. Make sure that we're capturing everything, we're not forgetting about things, but there's not a whole lot of complex tax strategy that's available to most of us. So here's just a little primer on income taxes so you guys understand how this works. Your income, as far as the government is concerned, is any kind of money coming into you. So any sales, revenues from any way. So if I'm going to take the example of a blogger. So I actually have a couple blog clients. I have a pretty successful food blogger. So she has income coming in from different sources. She's got referral fees from ad revenue. She's got some sponsorships. She's got some paid spots. She gets paid for speaking. So all these different pieces are income that she needs to report on her tax return. So we take the income, then we back out any expenses related to that business, and our bottom line, our bottom line, I guess, is our taxable income. So the taxable income times your tax rate is what you owe. This is your liability. So I just want you to understand how this works. You have to pull in all your income, but you get to offset it with a lot of deductions that, unless you're a business, you don't get to write off. So when you're an employee somewhere, let's say you are an employee, I'm just grabbing something out of the air, a teacher, you get $50,000 a year in income. Well, there are no expenses or very little expenses that can be written off against that. When you're a business, there are a lot of ways to make things tax deductible, and I'm personally pretty good at this. We'll talk about the deductions in a second, but income tax 101, taxable income. That taxable income is attributed to the owner of the business regardless of how much cash comes out of the business. This is very important, very important. So we'll go back one slide. We've got our income and our expenses. Let's say that our income is $10,000, our expenses were $1,000. So there's taxable income of $9,000. If that $9,000 is sitting in our business checking account and we as the owner have not taken $1 out to put in our pockets to pay for our personal expenses, it doesn't matter. That taxable income is still going on our tax return. We're going to pay taxes on it. Okay, so it does not matter if you take cash out from the business. Okay, and that's kind of been a surprise for a lot of clients that we've had. where they say that, here's our income, here are our expenses. We've got some cash left over in the bank. I can't take it out because I'm going to need it next year. They still have a tax bill. So again, cash extracted from the business to the owners is totally unrelated to how much you're going to end up paying in taxes. All right, so deductions. This is where it gets fun. So deductions, for a business deduction to be deductible and reduce that taxable income, the deductions must be ordinary and necessary. This is IRS code language. Ordinary and necessary. Ordinary means it's common and accepted in your trade or business. Necessary means it's helpful and appropriate to help your business, to expand your business. So it's got to be both of those things. So if I am sitting in an accounting firm and I decide I want a 4-pound dog to hang around the office because I think it looks cool, that's not an ordinary or a necessary business expense. I can't write off the dog. However, as an accountant sitting here, I'm looking at my high-speed scanner that I use for scanning documents and getting them into our storage. That is ordinary. It's common and necessary. Common and accepted, and it's also necessary and helpful for my business. So that scanner is deductible. Just some common deductions that you want to be aware of. Cost of goods sold. So those would be the direct cost of providing a product. So if you're an artist, this would be the supplies. If you're a painter, it would be paint. If you're a jewelry artist, it would be wire and stones. It's the stuff that actually you buy and goes into the thing you sell. So those are cost of goods sold. Payroll costs, if you have employees, you can certainly deduct the cost of those employees, their wages, as well as their taxes. Contract labor, so a lot of people, a lot of creatives especially, as they're starting to scale their businesses, don't want to commit to having an employee and having a certain amount of salary due to an employee, or wages due to an employee every period. So they'll use contract labor to help provide services or products, maybe on a temporary or as needed basis. That contract labor is a deductible expense. Supplies, so that could be office supplies like paper. It could be ink, printer cartridges, if you actually print anything anymore. I often call, I'm lumping in supplies with other office expenses, but I know a lot of you guys probably have software subscriptions that you use for work or for your business. So some of the ones that we use over here are Slack. We use Trello. We use Asana. Adobe. I know you guys, probably a lot of you creatives use Adobe. Those are all deductible software subscriptions. So that comes off the bottom line as well. Rent, if you're having a rent studio space or office space, it's deductible. The utilities associated with that are deductible. If you need insurance for some reason, that comes off. Depreciation, we'll talk about in a second. And interest. So if you have a dedicated business credit card, you only use that credit card for business expenses, well, the interest that you accrue on that credit card would be a business expense as well. Okay, compensation issues. So this is a question we get often, like, do you need to make yourself an employee of your company? And I would say 9 out of 10 times for you guys, the answer is no. It's only when you get to really a certain income level where that makes sense. For now, you are just the owner. So when you get, you have money coming in, you've got some cash, you're ready to take out, you just take it. It's yours. You've already paid taxes on it, right? As we mentioned before, you had the $9,000 sitting in the bank account. Whether you take the money or not, you're paying taxes on it. So if you need to take a draw, that's what it's called, a draw, you can certainly take that out. That is your compensation. It's not really until you get to, this is just a blanket threshold that we sort of use over here, is maybe $150,000 of income before you need to look at segregating yourself between a corporation and an employee. So many of you guys probably aren't there yet. So I wouldn't worry about that. But what about the people working for you? That's a little different. So when you have folks that are working for you regularly and they meet some certain tests that the IRS puts out, you've got to make them employees and you have to pay payroll. So those tests are things like, are they coming to your space and working in your space with your tools under your direction? Now, the thing is that employees have rights that contract laborers don't. So from your perspective as the owner, it behooves you for somebody not to be an employee, but the IRS knows that. And so when somebody starts to look and act and smell like an employee, it's time to put them on payroll. But how do you set up payroll? It's easy and it's fairly cheap. It's not that big of a deal. It used to be that you would have to, file your own tax return, payroll tax returns, or hire an accountant to do them for you. These days, it's pretty easy to get on a cloud-based system. I happen to like one that's called Gusto, Gusto, and I'm happy to connect you guys with them if you're interested. But Gusto, is very inexpensive for what they do. They file all the payroll tax returns. It's a cloud-based system, so you can either set it up to pay salary without you touching it. So it's something called autopilot, where you're saying, okay, I'm going to pay my employee $500 every 2 weeks, regardless, and it just does it. It gives them direct deposit. It takes out taxes. It remits what needs to be sent to the IRS or Louisiana, and it's just handled beautifully. So payroll is not the ominous creature that it used to be. It's pretty easy to handle. Okay, home office deduction. This is one we get all the time from creatives. A lot of you guys are working out of your homes. So what is a home office deduction? Is this still a red flag? You probably have heard like some accountants don't like to take it because it used to be a flag for audits. My philosophy is if you're entitled to it, you take it. And if you get audited, you explain why you're entitled to it. I would never not take a deduction because I thought it could be paying for audit if it was a legitimate deduction. So forget about that. If you are entitled to it, you should take it. What is the definition of a home office that you can deduct? Well, it has to be exclusively used for that business. So it has to be a room or space in the home used for nothing but that business. So if you have a guest bedroom with a desk in it, and that guest bedroom is sometimes used for your mom to come stay and sometimes used for you to work, that doesn't meet the requirements. It has to be exclusively used for your business. It has to be used regularly, so it can't just be an occasional home office. You have to have a trade or business, meaning you have to have some sort of profit motive, and it has to be a real trade or business. And it has to be the principal place of business. This is probably sometimes the thing that is the hardest to meet for folks. So if you have an office somewhere else where you're working, or a second studio where you're working, you only get one. Only one of them is the principal place of business. So where are you meeting with your clients? Where are you producing your goods? Where are you doing the accounting and the management? So where are you doing that most? And that's your principal place of business. You only get to do the one. Whether you rent or own your home, it doesn't matter. Those requirements for becoming a deductible home office deduction are exactly the same. So how do you calculate this? Well, very simply, you take the square footage of your entire home, and then you take the square footage of the home office, and you get a percentage. And that percentage of each expense is a deductible home office expense. So for rent, if you're paying $1,000 a month in rent and 20% of your home is your home office, well, you get to deduct $200 a month for a home office. Same thing with utilities, repairs, housekeeping. So now that becomes a little bit deductible, right? So you have a housekeeper that the 20% is deductible. Your lawn care, even though you're not working on your front lawn, the lawn care for the home, because it's an overhead of the home, 20% of that would be deductible. Again, alarm monitoring, pest control. So all these little things that otherwise would not be deductible to you, you're still paying them, they're personal. We can convert a little bit of that to be a deduction. Now it offsets your business income. So, the goal is to try and get that business taxable income down as much as possible. But these little pieces do help. They shouldn't be ignored. If you own a home, it's a little bit trickier. So you've got to take the purchase price of your home. You would look at each mortgage payment and say how much of it was interest versus principal. Take that interest out, and that's the part that you can use your percentage on. And then you've got to take that whole home and depreciate the business part of it every year. So it is a little bit trickier if you have your own home. Everything else is still deductible, meaning the utilities are still prorated, the pest control is still prorated, your lawn care is still prorated. It's just the part of your mortgage that gets a little bit more complicated. If you don't want to deal with all this mess of calculating percentages, you can take this safe harbor the IRS just releases a few years ago, saying, look, just measure off your home office, and we'll give you $5 per square foot, not to exceed 300 square feet, and you don't have to show us any receipts. You don't have to depreciate on your mortgage. You just get the $1,500 if you've got 300 or more square feet. Okay, this is the second biggest issue for sole proprietor entrepreneur clients. Meals and entertainment. When is it deductible and when is it not? So the two ways that meals and entertainment can be deductible are, number one, you're out of town on business travel, or number two, the meal has a business purpose. So a business purpose means somebody has to be with you. So if you're living in New Orleans, and you want to have a meal in New Orleans, the only way you can write that meal off is to have basically a meeting with somebody over that meal. My office happens to look over the brand new fancy patio at El Gato Negro in Lakeview, and it's very lovely, especially a day like today. I'd love to go sit on that patio. I can do that, but I can't deduct it. Even if I bring my computer down there, that doesn't make it deductible. So it's a personal expense. It's a personal choice for me to go down there or to go to a coffee shop and work. Those are personal. Unless somebody is meeting with me, it's not deductible. Now, if you're out of town for a business purpose, then your meals while you're out of town become deductible. And when we're looking at the dollar amounts of these deductions, meals and entertainment are only 50% deductible. So if you spend $50 on a business meal, you're only going to reduce your income by $25. Auto expenses. So how do we account for driving around for our business? Certainly that's a normal, ordinary, necessary business deduction. Two ways you can do that, either the standard mileage rate or you can take a pro rata share of your actual expenses. The mileage rate for this is actually 2017. I'm sorry, I updated the mileage rate. I did not update the year, but this is 2017's rate is 53.5 cents per mile. So I would track all my miles and just take a straight deduction for that. Or I can say, okay, here, and this is kind of a pain. I mean, there's very few people I would suggest doing actual expenses because it requires so much record keeping and documentation. You have to keep track of every single mile you drive and say, okay, I drove 10,000 miles this year. 2,000 of them were for business, a business purpose. So therefore, 20% of the interest on my car, 20% of all my gas, 20% of all my insurance, 20% of car washes and maintenance. That requires that you've got to have to keep receipts for every single time you go to the gas station, every single time you get a car wash. I personally think it's probably not worth it. There are certain situations where it is, but for most of you guys, it's probably much easier just to take the mileage rate. Now, both of them require that you have to show how many miles you drove. So even if you're using the mileage rate, you're still going to have to track your business miles. But I mean, that can be done fairly easily. Frankly, I end up looking at my calendar usually at the end of the year, and I can just keep my calendar and I say, okay, I went to this meeting uptown. I had to drive out to the airport 17 times because I was getting on flights for work. So that's deductible mileage. So I kind of look at my calendar. There is an app that I know a lot of people like called Mile IQ, and it just runs in the background of your phone. It runs on GPS. And so it's kind of like Tinder for mileage, where every trip comes up as sort of a card, and you swipe left, I think, for business and right for personal. And so it sends you an email to your report every month that says, this is how much your business mileage was. I mean, it's a great app. I think it runs about $6 a month or something, $5 or $6 a month. But if you're really using your car often for business driving and you're not very good about locking it down and writing down your mileage, that is a great app. It just handles it for you. Depreciation, when you buy something that's that's going to last you longer than a year, theoretically, you should look at how long it's going to last and take one, if it's supposed to last 5 years, you take 1/5 of it as a deduction every year. That's called depreciation. So you spend $1,000 on a piece of equipment that will last you 5 years. You take a $200 deduction every single year as depreciation. There are some exceptions to that. The biggest one is something called 179. Your tax preparer might throw that out at you, or you can throw it at your tax preparer and they're like, that's crazy, code sections. 179 means that if you have a lot of income, enough income to write stuff off, that $1,000 piece of equipment, if I have more than $1,000 of net income at the end of the year, I can just take the whole thing. And there's some limits, but you guys, I'm not going to go into that because the limits are for much bigger companies in general. Okay, so my point that I started out with was, 85% of a business's tax deductions are cash transactions. They go through the bank or they go through a credit card. So you're spending money on software, you're spending money on supplies. There is a cash transaction to be associated with that. So if we can capture all those transactions through a credit card or a bank feed in an accounting system, most of the work is done for us. I love Xero. I think it's the best small business accounting package out there. I've used it exclusively for going on 5 years now. I don't take any QuickBooks clients. I will not help anybody with QuickBooks. I think QuickBooks is awful. But Xero does sort of the same thing. I feel like it does it better. It was built in the cloud for the cloud, and so it just works really well. But what's important about it is the screenshot shows you an example of how easy it is to match up bank transactions and code them. So the game with bookkeeping is something happens, a transaction happens. How do we classify it? What bucket does it go into? Does it go in the software subscriptions bucket? Does it go in the cost of goods sold bucket? That's all accounting is. It's like sorting laundry. It's just putting the transactions in the right bucket. And something like Xero really helps with that. So just a couple more quick things and then we'll open it up for questions. Substantiation, the IRS wants you to have receipts associated with every one of your expenses. So I know it's hard to keep track of paper. I personally like to keep them electronically. There are apps out there for that. Xero does that on its app as well. And so that was a quick rundown of accounting and taxes for creatives, but I'm happy to open it up for any questions we might have.
Okay, Amanda, can you hear us?
I can hear you.
Okay, cool. So we have some questions lined up from some people. So kind of scooting back to opening up a business checking account. That's kind of where the first one comes in. So the question is if you don't have enough money in your business checking account to cover expenses, like how do you handle that? So I think it kind of stems from where you were saying, like you want all of your income and outgo to go through the checking account. Yep. And so like what happens if like it's not all covered in both directions? Like is there a certain way you can like?
Yep. So the cleanest way to do it, would be to put your personal money into the business checking account and pay the business expenses out of that account. So that happens, I mean, more often than not with new businesses where you're the owner, you've got to put a few $100s in, you pay some cost, you still need some costs covered. So you're gonna have to contribute more personal money, but it's much cleaner to write a check from Amanda Aguillard into the Aguillard accounting or elephant training account and then pay for those expenses out of that than it would be if Amanda paid for some stuff on behalf of the companies. It's gonna get lost later. We're just never gonna find it.
Okay, cool, gotcha. Okay, now this question kind of fast forwards a little bit through the presentation. So I think this came from the next two come from expenses and write-offs. And if you guys have any other questions in the chat, I see a few coming in. A lot of people hate QuickBooks. Agreed. And so someone's asking if there'll be a replay and go back to the last slide. So we'll do all of that. We'll send out the replay. So you guys will have it. It'll live on the website, so you can always refer back. And I have two more questions, but if you guys have any others, go ahead and put in the chat now. So back to the expenses, Amanda. One of the questions is if you're a reseller, like if you resell items, can you write off the cost of the items you bought from a wholesaler? Like, does that qualify as an expense? And like, I guess they were curious because it's not technically a supply, but it's kind of a supply to them. So I don't know if you have any insight there.
So if you're a reseller of something, yes, that's cost of goods sold. So let's say I buy some, I'm trying to come up with a good example that would be relevant to you guys. Like I buy some, I don't know, jewelry, and then I repackage it and resell it. So, or if I like, you know, your cute earrings that you have on, I'm going to start a retail shop and I'm going to sell pop-up cute earrings. And so I would buy those earrings for, you know, $30 and I'm selling them for 60. Yeah, that $30 is a cost of goods sold. So, so yeah, it definitely, you know, it would reduce the amount that would be taxable to you. Now you might run into some inventory issues if that's your trade or business where you've got a lot of stuff coming in and out. So that kind of requires a little bit more strategy, but yeah, absolutely. If you sell something, you can reduce the income by the cost of what you sold.
Cool. So you're saying like if they're not sold yet, it might cause a problem?
Right. So like if you buy 10 pairs of earrings, but you've only sold 5 throughout the year, well, you can't write off the cost of the things you don't sell. You can only exclude the parts that that you've sold. In general, there's some exceptions to that, but
okay, I see. That's actually probably really important for people to know, because I wouldn't have. I mean, it's not like in my realm to do this, but I feel like that's like a really big detail that I'm not sure if people were clear on. So the next question is, so this is someone who's considers himself a digital nomad. So basically, if you wind up moving around a lot, and like you work at co-working spaces, or let's say you're a travel blogger, and like you go to different coffee shops to work, like how can that fit into the expenses for the office write-offs and things like that? Like, can it, or does it go to meals and entertainment, or how does that fit in?
Yeah, so we didn't really talk too much about travel, but I consider myself sort of a guru on how to make travel tax deductible. So yeah, so if you are going from place to place and you're paying for co-working space, that's a deductible expense. I would not say that, you know, because you choose to go to Montreal for the summer and live there, that your apartment in Montreal, you know, would be deductible unless there's a reason for you being in a certain space. So you have to kind of be careful of that. Now, again, I would look for a place if I'm going to travel and I want to make it as a business deduction. I would look for a locale that is relevant to my business. So for me, Zero happens to be based in New Zealand. So I could go to New Zealand and stay in New Zealand for a week and consult with them and be able to write that off. But that travel, you know, definitely anything that's a direct expense. Like you've got to have co-working space to work. You've got to have, you know, maybe a hotspot for traveling Wi-Fi. Those things are absolutely business expenses.
Okay, that kind of leads into a next question that someone has. So when you're traveling for business purposes, so you can write off the hotel and the internet fees and like everything that goes into that, everything that so you said meals, and then someone's asking about hotel stays, which I feel like is totally, well, I'll let you speak on that.
Yeah, no, so if you have a reason to go somewhere, then the costs incurred in that trip are deductible. So absolutely, the hotel stays would be deductible. The flights or the mileage to that location are deductible. The meals are half deductible. The only thing that I would not say is deductible would be like personal expenses. So if you you know, have a headache and have to buy aspirin and you happen to be in New York, that's not a deduction, you know, but the meals are the travel, the Uber rides in town, or, you know, public transportation fares, that's all absolutely deductible as long as you've got a reason for being where you are.
And if you have like a partial trip that's like, if it's part business, part pleasure, like, is there a way to record it so that you're doing it all in a legit way so that only the business expenses are coming out? Like, are there some tricks on that?
Yeah, so the IRS says if you're traveling domestically, then your travel to and from if you're traveling domestically and it's part personal and part business, the travel to and from is fully deductible, but you just have to prorate your stay. So, so like, let's say I actually have to go to Cincinnati for work on Monday, for 3 days. So my flight to and from Cincinnati would be deductible. If I wanted to stay an extra 2 days to visit, then I could write off Monday, Tuesday, Wednesday hotel, Monday, Tuesday, Wednesday transportation, Uber, Monday, Tuesday, Wednesday meals, and then Thursday, Friday, that's personal. So I'm paying that personally, but my entire flight there and back is deductible because it's domestic. When you're looking at international flights, you have to prorate the amount of the flight as well based on the number of days worked versus personal days.
Okay, cool. So it's kind of like the office, like almost like a percentage.
Yep.
Like think of it as like 100%, and then how many of those days are actually for business.
Yep.
Sweet. Okay, cool. So we're getting a lot of people saying that like we answered their questions, and then actually this is kind of a perfect segue because people are saying that they hate QuickBooks, but then they're asking to recommend an online banking company. So I feel like you probably have a lot of insight on that, and you can talk a little bit more about like what you do on a regular basis and Elephant and Xero
Sure.
and all that good stuff.
Yep. So with regards to QuickBooks, I'm glad. I guess I'm not glad to hear it, but there are other options. There are some good ones. One thing that I'd caution you guys on is like there's some online accounting packages out there that really aren't full accounting packages and don't really handle fixed assets very well. Xero is a great package. It's simple, it's easy to use. It can be used as you scale. So some of the one I'm going to mention is Wave. FreshBooks is another. Those are for real small businesses, and they aren't really comprehensive packages. Xero is something you can stick with and scale. As far as an online bank, I'm assuming that the question was related to like which banks work well with technology. And I actually did a small business banking webinar 2 weeks ago about this, and it's interesting because I used to believe that small banks were better for small businesses, and I don't believe that anymore. Strictly because of technology. The bigger banks have better technology. I happen to like Chase in Louisiana. They have a lot of mobile features, and their bank feeds really work well. Wells Fargo happens to be one that has a lot of technology invested. Silicon Valley Bank is another. I know a lot of startups, especially on the West Coast, look to Silicon Valley Bank. Capital One's pretty good and getting better. So those are all really huge banks. Bank of America is another one that I know works really well. So those are all huge banks. I'm not familiar with too many online exclusive banks. And the ones I've heard of don't really have great technology, which seems ironic, but it's true. Okay, a little bit about how we can help you if you're interested. Our training company is called Elephant, ELEFANT, elephanttraining.com. We are specialists in Xero, and so we have training webinars for advisors and bookkeepers, but also for small businesses. So we do a couple of live webinars on the small business front. We have a 1-hour webinar that is sort of a quick jumpstart. It's like immediately how to use Xero, the features you need to know about it, which would be bank reconciliation, invoicing, so how to invoice out of Xero, and how to attach receipts and substantiation to your transactions. And then we also do sort of a cleanup one. So if you are a Xero user and you are getting ready to do your taxes, we teach you guys how to go in and look at your Xero financials and figure out what needs to be done. So here's a little bit about that, and we're happy to help you just go online. If you want to reach me, you can reach me at amanda@elephanttraining.com. Our Twitter handles are Aguillard Accounting for the firm and me personally, and Elephant Training for Elephant Training. So thank you so much, guys, for inviting me. It was fun as always. I love helping your creative entrepreneurs out.
Yeah, thank you. This was like so good, and everybody in the chat, I don't feel like you can see it right now, Amanda, but I just wanted to let you know that everybody in the chat is just saying like how perfectly the questions have been answered and like how informative it's been. And just to let everyone know that the webinar we'll send out a replay via email. So if you're not on our email list, You can hop on there. Sierra's about to share a link to our online community, so we'll make sure that so that you're able to kind of like see it again if you need a refresher. I know like we're all probably scrambling to do our accounting stuff, and like, you know, if you want to make sure it's not as terrible this year, next year as it was this year, then hop on over with Amanda with all the training and stuff. But Amanda, I can't appreciate it enough for you joining us, and you always make numbers somehow fun.
Thanks, guys. I'll talk to you soon, and hopefully I'll lay eyes on you soon too.
All right, sure.
Okay, see ya. Bye.
Bye, everybody. Thank you.
Bye.
Thanks, guys.